So let's talk about gold because that's shining the brightest. Chandrasekhar sir, what do you have to talk about the dose of nutrition that we get from this asset class in the financial portfolio, and how important it is considering all favorable scenarios for gold which are emerging right now?
Absolutely important. There are many asset classes, starting with equities. You have bond, you have forex, you have real estate, but commodities, and more specifically gold, has emerged as an asset class, an important asset class over the last 25 years. Okay, and more often than not, investment in gold has given double-digit return. Yes, there are years when the returns have been single digit or even negative for that matter, but those are exceptional situations. But by and large, gold has given double-digit returns to investors. And my strong belief is every investor must have at least 10% of his investment in the form of gold. Within gold, there are various investment options. We'll come to that later, but gold, 10% of the allocation should be for gold in my view, primarily because it's a good hedge against inflation, and it's actually also a safe haven asset. Central banks across the world are all buying and stocking gold like nobody's business. For example, the People's Bank of China, and of course many other central bankers. And demand for gold keeps rising, especially in emerging markets, populous countries like India, China, Indonesia, Turkey, etc., etc. Therefore, I think gold is a perennially glamorous investment for all of us, and it has not disappointed the investors. It's given a very, very good return, and therefore I would think gold must become an integral part of every investor's investment portfolio. Minimum 10%, it could go to 12 or even 15%, and there are some people wanting to take it up to 20%, but that's individual appetite and individual choice. But I would think 10% is a benchmark.